Welcome to the Keiser Report. I'm Max Keiser. You know, it's a whirlpool of money death. Stacy?
People are falling into the whirlpool, Max.
Really?
The Bitcoin whirlpool. So the headline reads, Bitcoin exchange MtGox faces whirlpool of death as prices drop to lowest point in 6 months. In the latest chapter in the continuing story of MtGox, the troubled Bitcoin exchange has further spiraled down the plug hole as it released another statement today citing security issues at its Tokyo office as the reason withdrawal capability hasn't been returned. So, you know, when they announced this headline is a few days old, the Bitcoin price at MtGox went to below $100. Now, many people on YouTube were shrieking, Max, talk about it! Bitcoin has crashed! It's $100! Well, of course, on the other exchanges, it was always above $600 or around $600. So you could either look at it as a shriek that Bitcoin itself is crashing, or as this tweet from Jim Rickards, who is an expert in markets and finance and debt restructuring and bankruptcies. If Bitcoin $200 at MtGox and $580 at CoinDesk, it's not two different prices. Market saying 65% chance Gox fails.
Well, of course, CoinDesk is not an exchange. That's an index of different prices on different exchanges. And the MtGox price is an indication of the faulty mechanism that they've used for price discovery that we've covered on the show many times. We've talked about it, not up to the task. And so they finally were overwhelmed, and they're probably going to go completely out of the picture. And other exchanges will take their place, and the Bitcoin price will recover because the underlying technology of Bitcoin, the cryptology, is not being questioned here. Of course, it's not as strong as Maxcoin cryptology, which has a superior cryptology and a faster hash rate. This is why a lot of people are now moving into Maxcoin, because they realize it's superior to Bitcoin in many ways. Bitcoin, however, does have a first mover advantage, and it is widely adopted, and there's a lot of services and goods plugged into it. But I wouldn't be surprised to see Maxcoin at $20, $30, $40 million market cap in the short term.
So the price fell down to below $100 at MtGox, went back up to $300, $340, and then fell back to $200. Now, during that whole time, mostly you hear a lot of shriekers. And it's also good to remember that this is what regulators, this is what central bankers, this is what politicians are hearing. They mostly hear the shriekers because they shriek louder than normal people who are understanding, like Jim Rickards could look at it and say, well, the market is just pricing in a 65% chance that MtGox will collapse. Just like Argentina, for example, their bonds, on the face of it, it'll say 100 US dollars, but you can buy them for $15. That doesn't mean that the US dollar went to $15. It means that people are thinking that Argentina has an 85% chance that they're going to go bankrupt.
Well, it's selective reporting of financial news. We see it in the gold market. The physical gold price is a lot higher than the paper price on various exchanges, but the media will report on the paper price even though that's not the actual physical price of gold in China and India and around the world, where it's trading at 5, 10, 15% higher prices. They also choose to pick the absolute least interesting price or a representative price for Bitcoin by picking on the MtGox price, which is not the price of Bitcoin. Why? Because the agenda here is clear. Banks don't want the competition. They don't want Bitcoin to succeed. The central banks that deal in fiat money don't want a competitor. They don't want a cryptocurrency. They are going to report the news in a way that reflects their interests. Unfortunately, there is no pure objective news source anymore aside from this show.
Now, over at MtGox, back to there, and at the time of this reporting, they're still up and operating. They have deleted their entire Twitter stream. We don't know. By the time this airs, they could have gone bust, and Mark Capellis could have jumped from some building in Japan. But there's still active trading going on there. There are people in the market who are gambling, who are taking bets. They're taking high risk, just like Paul Singer took a risk buying Argentinian bonds at $15, 15 cents on the dollar. He got courts in the U.S. to recognize 100 cents on the dollar for him. But there are people like Roger Ver, a huge Bitcoin investor, who has been buying up some of the Bitcoin at MtGox, taking the gamble, the risk. It's a huge risk for him that they might not actually allow withdrawals. But many are calling this the death of MtGox, but the exchange has yet to throw in the towel. Trading on the site is still active, and according to Marco Santori, chairman of the Bitcoin Foundation's Regulatory Affairs Committee, there's a lot of people who think that they are getting a deal. If the exchange manages to remain in business through the ordeal and resume withdrawal functionality, then those people are getting a good deal. Buying in at a low of $135, only to turn around a week later and turn it into $600 or more is exactly that. Perhaps a possibility of a quick and major gain is what will ultimately save MtGox from insolvency.
Right, there's what you would call an exchange arbitrage between the price on MtGox and other exchanges. The Paul Singer comparison is a good one. Paul Singer will engage in vulture capitalism, as it's called, picking up sovereign debt at pennies on the dollar and then sue the country for repayment in full of that debt. It's not a very pleasant activity he's engaged with. Just read the reports of Greg Palast on this to get a fuller detail. But yeah, Roger Ver, who's one of the founding fathers, really, of the Bitcoin movement, is acting as an arbitrageur, buying Bitcoin cheap on MtGox in anticipation of there being a closing of the price gap, and then he will make some money, and he's providing liquidity in this market, which is very, very vital.
Also in Europe, comparing to another currency that many people are screaming out of control that the euro is going to collapse. Jim Rickards, who we had on the show at the time, said it's not going to collapse. It's actually going to be stronger than the US dollar. That was back in 2010, 2011. He was saying that right here. But this is an article from December 2012 on Bloomberg. If you bought Greek bonds in January, you earned 80% euro credit. Investors bold enough to buy junk-rated Greek bonds in January have earned 20 times more than owners of top-rated German debt this year, even after the biggest ever sovereign restructuring. Greek government bonds returned 80% this year, compared with 3.7% for German bonds and 6.1% for Spanish securities. So back then, when everybody was shrieking that because the Greek situation, the euro would collapse, a lot of people made a lot of money on Greek bonds. A lot of people lost a lot, too.
Well, hedge funds are now in the business of monetizing Twitter activity, Twitter data, and one of the data points they filter for is the shrieking factor. So when you have a crowd of shriekers, let's say it's on a Bitcoin currently, or Greek bonds, Greek stock market, as a contrarian, you can make money because the crowd is invariably wrong. You know, that book that came out a while ago, The Wisdom of Crowds, you'd have to compare that with another book called The Popular Delusions and the Madness of Crowds that came out 100 years earlier. The fact is that people who have made a tremendous amount of money in these markets, like a George Soros, for example, or a Warren Buffett, will do exactly opposite to what the shrieking crowd is doing. So when you see the shriekers, that they have a use. If you're in the business of making money, because they tend to sell at the bottom and buy at the top. So in the case of Bitcoin, the shrieks are quite loud, which is, on a contrarian point of view, the absolute best time to get into a Bitcoin. My price target is still, in the short term, $1,400. And in the medium term, more like $10,000 per Bitcoin as the adoption rate skyrockets. And you have all these other businesses that are now plugging into Bitcoin. All the venture capital is plugging into the Bitcoin blockchain. So 2 years from now, $10,000 per Bitcoin, I think, is in the bag.
Now, speaking of shriekers, one of the most famous shriekers of all time, Jim Cramer. Remember, during the early days of the financial crisis, he went on to CNBC, had a total meltdown, shrieked about, this is no time to be an academic. You've got to bail out Bear Stearns. My friends are suffering. You've got to save the financial system. Well, we now have those minutes released from the Fed from 5 years ago during the financial crisis, 2008. What the hell were they thinking? Fed 2008 edition. This is a quote from Fed Chairman Ben Bernanke. At the time, September 16th, 2008, 2 days before the collapse of Lehman. He said, I think that our policy is looking actually pretty good. Our quick move early this year, which was obviously very controversial and uncertain, was appropriate. He's, of course, referring to the 75 basis point slash in interest rates on a Sunday night to rescue Bear Stearns and JP Morgan. But here he is 2 days before the collapse of Lehman Brothers, where he's like, it's all looking really good.
Well, we also know, looking back 5 years, that 90% of the gain post-collapse was grabbed by less than 5% of the investors. Less than 5% of the households in America and around the world grabbed 90% of the gains. Stock markets have doubled. Some banking stocks have quadrupled and quintupled. 90% of those gains were grabbed by insiders, friends of Hank Paulson. Remember, Hank Paulson told his investor friends that they were going to bail out Goldman Sachs, although at the public domain he was saying he wasn't sure, or they might have to fail. But privately, he engaged in a massive insider trading scheme and told people directly that the government was going to line their pockets with several $100 billion.
Well, that's good to compare it to the Bitcoin situation at MtGox. Now, what Hank Paulson did is he told some Goldman Sachs investors that he would be bailing out Fannie Mae and Freddie Mac, though in front of Congress to the American people, he said that would never happen. But indeed he did. So only Goldman Sachs knew that he would bail out Fannie Mae and Freddie Mac. So this is one of the speculations about MtGox, is that, of course, they know whether or not they have, only Mark Karpelès knows if he has Bitcoin to give to his clients. So he could, if he does have them, he could, of course, buy at $100 and then sell them at $600 later.
Right. Well, Goldman Sachs, from what we know, is actually taking a close look at Bitcoin now, and they've been doing some internal research and circulating internally. So obviously they're quite envious of MtGox and Bitcoin at this stage. And grabbing market, grabbing attention, it's obviously the growth industry to be in. I don't think Goldman Sachs will participate like some of these other new upstarts will, but they will try, and they, of course, will do whatever they need to do to try to grab as much of this business as possible. They didn't become Goldman Sachs by sitting on the sidelines.
And then finally, a quick little headline about the biggest participant in the money laundering operations of not Bitcoin, but the U.S. dollar. Mexico's top drug lord, Joaquin Shorty Guzman, arrested. So one of the world's most wanted drug barons, Joaquin Guzman, known as El Chapo or Shorty, has been arrested in Mexico. He was the leader of the Sinaloa cartel, which smuggles huge amounts of legal drugs into the U.S.
And so we must see how this will impact HSBC, because, of course, the Sinaloa cartel was HSBC's biggest single client, accounting for billions in revenues over the years. So we'll see. I suppose they'll either get an overt bailout from the government or a stealth bailout from the government. That's the way it goes. Stacey, we've got to go. Thank you.
It could cause a whirlpool of dollar death.
Whoopee! All right, stay tuned for the second half. A whole lot more. Welcome back to the Keiser Report. I'm Max Keiser. Time now to turn to Jan Scoyles of therealasset.co.uk. Jan, welcome back to the Keiser Report.
Thank you very much. Sun's shining.
Oh my
Lovely
God,
to be
it
here.
feels fantastic.
Finally.
Now, I've been reading with great interest on your blog. You're talking about the latest and the greatest, the 5 greatest gold robberies. Tell us briefly about these heists and what lessons can we draw from them?
Well, I think number one is don't steal gold because it doesn't really work out very well. I think that's
Why do you say that?
one.
It's hard to move around?
Well, not only is it hard to move around, but once it's been stolen, it's very difficult to launder gold. But we looked at, like you say, the top 5 gold robberies that I enjoyed, and these were just kind of criminal heists, not none of the government ones, which lots of people have commented on since. But the best one was, I think it was 1983, a robbery from a Brinksmat vault. Some guys broke into the warehouse at Heathrow, thought they were going to get about $3 million in cash, I think, and instead were faced with just tons and tons of gold that was actually destined for the Far East. Then they have to try and get this gold out of this warehouse. The van is scraping the floor as they drive off under the weight of all of this gold, struggling to refine it. And they were so proud of the things that they'd pulled off that one of them even named his guard dogs in the years afterwards Brinks and Matt. I mean, just the kind of, just very entertaining stories, some from like the late 19th century. But basically, if you're going to buy gold, store it in a vault rather than...
All right, well, I think that's the lesson, isn't it? Now, I think that movie, The Italian Job, with Michael Caine, featured a gold robbery as the basis, and the little minis were scraping along in the Alps, trying to make off with all that gold. So, speaking of gold heists, Germany has not gotten all their gold back from New York. Apparently, there's a heist going on, and Would you add this to your list? And would it fit into the heist in terms of the sheer quantity and audacity?
Well, I think it would be in a different list, you know, because as I was saying to you before the show, we wrote this list, it was kind of a bit of fun. But of course, there's that, you could do a whole other list with at least 5, if not more, of these kind of government or central bank robberies of gold. Not only is there the Germany's gold to be talking about, but you could look back at the Nazis, or you could look back at the, you know, the theft of in Japan of their gold loads, and I cover that a lot. But of course, I mean, Germany's one is just, the volumes are unbelievable, and I certainly haven't covered you know, these heists I was talking about a minute ago. They didn't have the similar volumes. This is completely different. And of course, in this case, unlike in the cases I've been talking about in these gold heists, we possibly know who might have taken the gold. You know, which is something that wasn't quite so obvious in the criminal gold heist I was talking about. So no, this is on a whole other level, and maybe we should write another list on other thefts.
Why do people even want gold? I mean, according to Ben Bernanke, the outgoing Fed chairman, it's just a collectible, a trinket that people might want, or
it's just tradition.
Tradition.
Yeah.
Keynes, I think, called it the barbarous relic. So apparently, there's people actually want gold.
Well, apparently so. But of course, I want gold, and I think, you know, you and your viewers want gold. And the World Gold Council figures that came out last year, for last year, they were released last week, show that no matter what governments say, or no matter what restrictions put on, people still want to hold gold. Particularly in China last year, but look in India where restrictions put on. And what was really interesting about the World Gold Council figures was, for the first time in 12 years, I think, UK and US demand, gold demand, climbed, particularly in the area of jewellery. So people do still want to hold gold, and we can't say that there isn't a parallel with gold demand and what's happening in the economy, whether locally or internationally.
All right, now your associate Koos Jansen has a piece about China's gold. What's happening in China right now? Demand is
going up. There you go.
What? Can you do that again? I think that
it's rocketing.
That would indicate it's going higher.
Well, gold demand is just climbing. He released the figures for January demand, for the whole demand, and I think it was 246 tons. It was a record amount, and this is when the World Gold Council are releasing figures going, oh, they've only just overtaken India's gold demand, which is absolutely not the case. If you look at the way that Keiser analyses gold demand in China, he does it in a much more methodical, and he investigates it much more. He looks at deliveries on the Shanghai Gold Exchange, and actually China took over India's gold demand back in 2011. And not only really should we be talking about gold demand in China, but we should be looking at how they're developing the gold market as a whole, from the supply and the demand side, facilitating sales, what's happening with exchanges, who they're allowing to trade on those exchanges. And of course, you know, there's lots of discussions about what's happening with the PBOC's own reserves, and that's just a whole other sort of story in itself.
People Bank of China, there's a lot of talk now coming out that they're going to announce soon that they've got not 1,000 tons or 2,000 tons, but a number considerably higher than that. Yeah,
I think, you know, if you look at sort of what past Chinese academics have written on this, we could be looking at around amount 5,000 tons. But so many people have postulated on what it could be. We really don't know, because we don't know about their mining figures that are happening, and we can look at the Hong Kong imports, Hong Kong exports to China, and we can look at those and we can calculate that. But actually, there are obviously loads of other ports in which gold's been imported. The Chinese are buying up mines all over the world, so we don't really know how much the PBOC have. What we do know, and we believe, is that they have a lot more than the 1,049 tons they purportedly have at the moment.
Right. Now, gold is up 10% in dollar terms. Silver is up 13%. So is this a resumption now of the secular bull market going back 10 years? Or are we out of the woods? Are we out of the bull market pause? Is this a good year? Tell us.
I'm actually really excited about 2014, which is going to sound a bit over the top. I think in terms of price, I heard someone describe it. It was a really good way of describing it. It's a Goldilocks year. It's not going to be too hot or too cold. We're going to just sort of take a step back, a breath, and just go, right, last year, a bit tough. Let's kind of, and, you know, we saw the gold market almost sort of divide. It became polarised, I think was the phrase that the World Gold Council used last year. We saw huge ETF demand outflows, but consumer demand actually really managed to kind of stop that being quite as horrific, you know, on the price as it could have been. And I think this year we've kind of shaken out those people that were there just speculating. And now we've got the consumers in there. Coin demand's looking amazing. Chinese demand's obviously going to keep going, as is India's demand. The West is getting more interested in gold. So in terms of price, I think, and I might be back on in a few months saying something else, but at the moment I think it's going to be a gentle climb upwards. But in terms of the bull market, I don't think we're kind of back on that scale. But I think the faith in the market is returning.
Now, one of the problems gold has, of course, is that mainstream media tends to look down on gold. If the price is down, of course, you'll see CNBC, they'll have blaring headlines, gold is down. When the price of gold is up, they'll be like, it's
a bubble. It's a bubble.
It's a bubble. It's a bubble. So there's a huge asymmetry in the way the media reports gold. Now, into this asymmetry, you, Jan Scoyles, and Stacy Herbert are jumping in with a crowd-funded TV show called Get Real.
Mm-hmm.
Now, we talked about it last time you were here. And the crowdfunding platform StartJoin, this is the newest and greatest.
The greatest.
There's Kickstarter and Indiegogo are so 2013.
They're just gone.
They're yesterday's news. This is UK. This is UK based.
Yeah.
It's proper crowdfunding. You have to drink tea while you're actually crowdfunding.
With your pinky up.
So the project is called Get Real, to crowdfund future episodes. People have already, you've done a couple of episodes.
We have, yeah. We did one on gold and silver with Ben Davies, and we did one on fine wine investment with Chris Smith from the Wine Investment Fund. Right,
and the popularity is quite high. So this is now, tell us about what people can expect on this a little bit.
Well, if it's real, we'll be talking about it. So I was sort of looking at, we've had some great phone calls and some great tweets suggesting things from Chinese porcelain to fertilizer to farmland to, well, my personal favourite, which we discussed before, handbags. You know, that we can also discuss that. But we've had, but loads. So, I mean, really, when it was Stacey and I and you and I first talked about it, I was like, okay, gold, silver, you know, and oil, and you know, all these things. But actually, you know, art. There's so many different real assets that people want to get their hands on. And again, when we were talking about gold demand climbing. If we look at, for instance, Chinese porcelain or jade, I mean, the demand for that in the last few years, or for art, it's just been unbelievable. This is where people want to put their money, and I think I don't think people realise how to go about starting, or they don't know sort of anything about these markets or the opportunities that are there.
Let me cut in here for a second, because I know, you know, we're all good friends of Jim Rickards, who wrote Currency War, and he's got a new book coming out, The Death of Money, and he points to the art market and saying, look, people say that quantitative easing is causing inflation, and other people say it's not causing any inflation. But in an area like art, where you don't have futures contracts giving you the ability to suppress the price, like you do in gold and silver and in other areas, the reflection of all that money is being captured by those prices of fine art. That's absolutely skyrocketing through the roof.
Yeah, I mean, every week it seems like there's another headline on record broken at Christie's, you know.
Or cars, collectible cars. Yeah. So the show Get Real, things that are real in a sense, that whether it's fine art, collectibles, handbags, etc., they're really reflecting all this money printing. But again, the media doesn't want to cover it, because then they'd have to admit that there is really inflation, and then they would have to recalculate their indexes, and in the case of the UK government, they would have to start paying out pensions that they don't want to pay out. Same thing in the US. There's a real incentive to lie, not to put too fine a point on it, about the real inflation numbers. So your show, Get Real, what you're crowdfunding, is actually a way to kind of let people know what the real inflation numbers are. They're not crazy. They're real. It's really inflation.
Yeah, this is really happening. You know, these numbers are climbing. And actually, yeah, it's a very good point that this is a truer reflection of what's happening in the monetary system than you're being offered, whether it within the FT or by the official government figures. You know, there's nothing to see here, folks. There's no inflation. You know, don't worry. But meanwhile, we'll just talk about this, you know, I don't know, bacon piece of artwork that's just climbed in price.
The price of bacon is skyrocketing?
No, the art
I feel like I'm in Canada suddenly.
No.
The bacon price is very sensitive in Canada. The entire country lives on bacon and hockey pucks. This is who's running the Bank of England now. It's Mark Carney. He's out there every morning at 6:30 a.m. with a plate of bacon, Canadian bacon. It could choke a horse.
Okay. Isn't it?
You didn't know that?
No,
no. So let's talk about, of course, being crowdfunded. And, you know, you are going right to the audience. Not only are they giving up £5 or £10 for to participate in funding this and maybe getting a premium or a reward of some type.
They're great rewards, by the way.
Are they great rewards?
They're fantastic rewards.
Any handbags or shoes? Not yet.
No, I'm hoping that's my reward.
Fair enough. So they are also suggesting topics they want to cover. So tell us what the public, what they're hankering for you to cover on your new show, Get Real.
Well, ones that I've just mentioned, we've had a lot of suggestions about Chinese porcelain. Fine cars, classical cars was another suggestion. I think, but that person that tweeted at me, I said, well, I'm only doing it if you let me drive one of your classic cars. I think that would be a perfect starter shot, I think, driving across Tower Bridge.
Well, there's that show with Jerry Seinfeld, comedians in cars going to have coffee. This could be part of the rewards. Could be you're in a car with Jan Scoyles driving across Tower Bridge,
yeah.
Drinking tea.
Yes,
for 20
tea.
pounds, would you drink tea in a convertible and go across Tower Bridge?
I would, but you shouldn't drink and drive, so maybe we'd pull over and drink tea.
Well, I mean, that's a good caveat to make here in this country, isn't it? Yes. Where it seems like the national pastime is, in fact, drinking.
Drinking, just generally just drinking.
So it's Get Real project. The site is startjoin.com, a crowdfunding platform I started just a few days ago to fill this critical need for honest media.
Yeah, I think it's a great idea, and I'm really excited that Get Real is one of the first projects on it.
All right, we got to go. Thanks for your time. See you soon.
See ya.
All right, that's going to do it for this episode of the Keiser Report with me, Max Keiser, and Stacy Herbert. I'd like to thank our guest, Jan Scoyles of therealasset.co.uk. And coming soon, the Smash TV show, Get Real. If you'd like to get in touch, tweet us at Keiser Report. Until next time, bye, y'all.